Happy to take some questions from there to address it with our top market experts. Let me now welcome our guest on the show. We have Mr. Kranti BATHINI joining in, Director of Research at WealthMills Securities. Warm welcome to you, Mr. BATHINI, and thank you so much for taking the time out. Well, so much to discuss, so much has happened since the last time that we spoke to you. On the one hand, positively, there is some cool off on the tariff front. The stance of the US government has softened, not just with India and but also with China as well, where there was an expectation of huge retaliation and a trade war to take place. Now the stance is softening there as well. Even on the auto space, there are statements that are coming in that the auto tariffs will not be as steep as expected. So things are going better on that front. But back home, of course, geopolitical tensions are emerging as a big overhang on the recovery that we are seeing in the Indian markets. Plus, we have the earnings, auto sales. So much is happening at this point. Do tell us, sir, how are you navigating through all these moves in the markets now?
Yes, actually, we went through the turbulent times of first 100 days of President Trump, and we witnessed what kind of volatility all the markets across the globe have witnessed. Thanks, after 100 days of his tenure at White House, he realized that some kind of bilateral negotiations are needed. That's what the administration at US have started. They started negotiating with Ukraine. The other hand, they also started with everyone, including China. So how these kind of negotiations going to progress? That's going to determine uh, the sustainability of the current rally at this point of time. But among all these things, actually, one change in the bigger narrative is in these 100 days. In the starting of these 100 days, everybody quite bullish about US funds, and the foreign portfolio investors, they are running after US, looking at the growth trajectory of US, and that's what Indian market have uh, want the faced the complete pain of the exodus of the foreign portfolio investors' money. And later on, there was a narrative. People start thinking that uh, the Chinese valuations are on a longer term basis, looks very attractive. Let's uh, sell India, buy China. That was the narrative was playing till a month back. And thanks to the tariffs, India looks to be a safe haven in the entire this tariff saga what we witnessed from starting of the uh, month of April. And India is the best place to hide for the foreign portfolio investors in the entire global universe because of the policy uncertainties across the globe. That's the reason, despite of some kind of lingering volatility on Indian market and rising geopolitical tensions, Indian market could able to attract more than $50,000, uh,
Yes,
50,000 uh,
crores.
crores of money uh, to Indian markets. And all the foreign portfolio investors who uh, are rising their eyebrows on Indian market a month back, they are turning quite positive on Indian markets at this point of time. We have a decent earning season led by the big boy like Reliance Industries, and also the commentary uh, from the companies. The corporates are quite sanguine for the coming quarters. That's where Indian market could able to climb these wall of worries, and we could able to sustain above comfortably at 24,000 level. That's what I can sum up. But we need to wait and watch how these lingering geopolitical border tensions going to be, because already the war is started in the newsrooms and on social media. But how at the border, how these tensions are going to be in the next couple of weeks, how these tensions are going to escalate further, or any kind of amicable solutions where we are going to witness. So everybody crosses the fingers. But Indian market seems to be, despite of these all these worries, seems to be a safe place to hide at this point of time among all these rising geopolitical tensions and trade wars.
Okay, so there you have the entire context of what is happening in the markets and how are markets really looking at the fresh moves. Nifty has slipped into the red. Remember, we were looking at 24,500 and beyond kind of levels, but there is an extreme amount of volatility now, and we have slipped below the flat line now. 24,318 can actually be seen. So swiftly, we are down by about 200, 250 odd points from the day's high point as well. The Nifty Bank has also cooled off from the day's high levels, although still maintains a green tick at this point in time. On the sectors, it's oil and gas, financial services, Nifty Bank, IT, private banks that are still holding up, and small caps also to some extent, but a large part of the sectors have also slipped into the red. We'll keep coming back to the markets and keep looking at what's happening on the D Street, but let's also look at some of the questions coming in for you, Mr. BtTv, from our viewers today. We have some questions on our YouTube platform. Some of them are coming in on our WhatsApp number as well. But let's look at the first question. Manoj Pai Kapadia from Ahmedabad, Gujarat writes in and he says, "Agle 6 months ke liye kaun sa stock acha rahega?" So straight away to you, Kranti sir, next 6 months somebody is asking. We don't know how things will be, but if one has to really select a stock that could potentially probably provide an edge to the portfolios, what would that be?
Manoj bhai, 6 months ke, if the investment horizon is 6 months, it's quite short term. But like he can look at stocks in banking and financial services. Both can be large cap banks. He can look at banking and financial services. Sector seems to be very attractive at this point of time. And also the defense, okay, that we have been quite bullish from quite a long time. Any dip in defense stocks, it can be warranted by. So for a 6 months time horizon, you can look the banking and financial services, and also any dip in the defense can be a better place in these market conditions.
Okay. Well, hopefully, Manoj Bhai, you have understood the logic right there that has been shared with you. Next, we have this question from Avdesh Thakur. IOC is the question on. He says, I want to invest in IOC at the current levels. Should I go ahead and do this? Now, there are earnings impact that we are seeing. Plus, there are brokerage houses that are penciling in much higher targets for IOC looking at the current realm on the crude oil prices. I think it was Morgan Stanley that gave targets of upwards of 200 odd and believes that, you know, 45-50% kind of a surge can be seen on the stock from the current levels as well. How would you look at Indian Oil, sir?
Sakshi, it's a very silent stock in the entire market. Okay. There was no momentum for this stock. It's a quite silent stock, but this company delivers its job. One need to also keep in mind, this is the second largest revenue earning company after Reliance Industries. The IOC, most people tend to ignore the fact. And very attractive valuations. And if you are a long-term investor, the yield, the dividend yield can be ranging around 6 to 7%. In some years, the dividend yield goes up to 8 to 9% also some years. But on a long-term perspective, one can get a better dividend yield at 6 to 7% for IOC. Always crude oil prices keeps the pressure on this stock, but GRMs are good in the recent past. And also the green energy and alternative energy initiatives the company is taking, that definitely going to give some kind of a momentum for the Indian Oil Corporation. So if the investor is a long-term investor, definitely any buy on Indian Oil Corporation can be bought this company in their long-term portfolio.
Okay, got that. I hope this has answered your question, Avdeshji. Next, we have this question from Ankur Modi on our YouTube platform. Ankur says, hi Sakshi, good afternoon, hope you're doing well. I'm very well, Ankur, thank you for writing in. His question is on two stocks, Mr. BtTv. One is Concord Biotech and the second one is Gabriel India. Now on both these stocks, he wants to invest at the current levels. Let's look at Concord Biotech, currently at 1486 odd levels. We have seen in the last 1 month that the stock has given up about 12 odd percent of move. In the last 6 months, it's down 18% odd. Year to date, it's down by about 30%. And, you know, we have been seeing a downtrend play on, especially from the highs of February of 2342, the stock has been consistently on a downward trajectory and has lost quite a bit there. The second one is Gabriel India. Let's look at that one as well. And currently at 543. Last 6 months, the stock has been slowly and gradually inching up. It's moved up 20%. In the last 1 month, however, some of those gains were also compromised. 9% odd kind of a weakness was seen. Your sense on both these stocks, Mr. Bathini, how would you look at both?
Actually, with respect to the Concord Biotech is concerned, the valuations seems to be softening at this point of time. The stock got corrected almost 50% from its peaks. So if the investor is a long-term investor, just wait for the earning results for the Q4 quarter. The current quarter results are not announced. Just wait for the results, and depends upon the earning outlook of the company, he can start accumulating Concord Biotech is concerned. It seems to be around from anything below from the current price of 1400 looks very attractive to me to accumulate this stock. But the main crux for this stock is just wait for the earning season, earning of this company. And coming to Gabriel India, any dip, definitely it's a warranted buy. They're mainly into shock absorbers and the other mobile auto space are concerned. The stock has been in a momentum zone at this point of time. If the investor is a medium to long-term investor, he can buy the stock at every dip.
Okay, fair point. Hopefully this has answered your question also, Ankur, and hopefully you will be looking at this stock with the guidance that has been given to you. Nanu Vyas is our next viewer who writes in, says, good afternoon, Sakshi. Good afternoon to you, Nanu. Hope you're doing well. He wants to know, is it a good time to buy Reliance Power? Okay, I think the trigger for Reliance Power clearly that you're looking at is the 10,000 odd crore rupee project that they are looking at in the green energy, solar energy space. Reliance Power and its subsidiary are making this strong move, and the stock did move up quite substantially in the middle part of the day, and then we've now seen some profits being taken off. This is for Asia's largest solar BESS project. Reliance NU Suntech, which is a subsidiary of Reliance Power, has signed this 25-year power purchase agreement with Solar Energy Corporation of India. And this agreement covers a supply of 930 megawatts of solar power integrated with 465 megawatt by 1860 megawatt per hour battery energy storage system, that is BESS, making it Asia's largest single location solar BESS project till date. And it will be developed over the next 24 months or with an investment of 10,000 crores, and the power will be delivered at a fixed tariff of 3.53 per kilowatt hour is what we know so far from the news developments. And after that, Nanu wants to know, would this trigger augur well for Reliance Power? Mr. Bathini, how would you read into this?
Sakshi, first thing you should aware, okay, the stock in the past 12 years, one of the big wealth destroyer. Okay.
Yes,
So
yes.
now what we are seeing is, okay, the stock got corrected from all-time high to lower level. And thanks to the up momentum in the power sector right now, power sector is in an up cycle. That's where the Reliance Power is taking the advantage. Until unless he is a high risk appetite uh, investor or trader, okay, we can venture into Reliance Power. But the fundamentals are still bleak. Okay, some type of these kind of news uh, because of these valuations, people tend to buy. But if he is a want to look for a great compounders with a strong fundamentals, there are many stocks in this space. Looks very attractive and looks promising. It is by and large some kind of a speculative, and also some kind of improvement, some kind of bottom fishing is taking place at this point of time. Until unless he's a high risk appetite investor, he can look for other stocks, or else any dip on the stock, if you have that high risk appetite, okay, he can consider Reliance Power.
Okay, got that. Only for high risk investors there. Please do note that, in the past we have seen, huge wealth being destroyed by Reliance Power. Things are coming in as far as the news flows are concerned, but as Mr. Bathini says, one has to really see whether fundamentals come into shape yet again, whether earnings are proven as well, and only then take a call. But if you're a high risk investor, only then you should be really looking at it as a bet for your own portfolio. Next, we have some questions on our WhatsApp, so let's start taking some of those questions too. We have this question from Momita from Kolkata, and she wants to know about two stocks. One is PCBL, that is Philips Carbon Black. She already has a stock in her portfolio at the rate of 410, and she purchased this stock for 1 year time frame. The stock, however, has now been on a downward trend. There was a time, a limited period, when the entire group stocks were going through a re-rating, and therefore a lot of investors were getting onto the stock. But now she purchased at 410, which means her price is still higher than where the stock is currently trading at. What should one do here? And the second one she wants to know is about AU Small Finance Bank. Will it be the right stock to enter at the current levels from the banking space?
Actually, with respect to PCBL, Philip Carbon Block is concerned, the stock was in a momentum zone, and everybody chasing the stock 6 months back. And what we witnessed is the stock has touched a high around 584. From there onward, the stock also got corrected almost 40% from its peak. The current quarter earnings are kind of a flattish kind of quarter they had, and also the margins have been came below the expected margin criteria is concerned. But given the kind of a strong pedigree and the group, the stock have a tendency to go in cycles. Okay, sometimes in a upward territory of these EV momentum and green energy focus is concerned, these stocks tend to outperform, and some kind of consolidation, long consolidations also, PCBL kind of companies tend to exhibit. At this point of time, she can hold on and just wait for some more kind of a earning momentum to pick up in this company. Otherwise, she can hold on for a medium to longer term perspective. With respect to AU Finance, small finance is concerned, she can hold on. This is the bank where they are applying to RBI with respect to the universal banking license is concerned. That's what the news are coming. And given the kind of momentum and positivity that is garnering around banking and financial services are concerned, she can hold on to AU Finance Bank at this point of time.
Okay, Mamita, I hope this has answered your question on both the stocks that you've asked, both on PCBL as well as on AU Small Finance Bank. Next, take Raj's question now. He's from Hyderabad. Hi, Raj. Good afternoon and hope you're doing well. His question is on Hindustan Unilever, but this is in the FNO space he's asking, sir. He's bought the option, the May option for Hindustan Unilever, 9 lots at the price of 17.5. Now he wants to know what is the target that he can expect. I'll give you that leeway, sir, if you do not want to answer in the options category. What's the outlook on HUL that you could share?
Sakshi, with respect to HUL is concerned, by and large, it is a defensive play and a long-term investment proposition. Of course, the investor tend to went into the option space. Okay. But gazing Hindustan Unilever, I'm not the right person in the options category. I'm a best person for investing in HUL. So I try to skip to answer his question.
Okay, got that. Let's take the next question. We have this question coming in from Satya CK. He says, hi Sakshi, good afternoon. Good afternoon to you. Also, Satya, the question he has is on ITD Cementation, sir. And he wants to know that he already has this stock at an average price of 120 in his portfolio. He's a long-term investor and the company is part of his core portfolio as well. Now he wants to know both fundamentals and technicals of this company. Are they conducive to add some more stocks to his portfolio as well at the current level? So he's sitting on good amount of profits. Long-term investor got in at 120 levels. The stock is moved up. 486 is the current price. Can he continue to add some more at the current levels as well, is what his question is, sir.
Definitely, Sakshi, he can add some more quantity at this price range. All the cement companies are posting very good set of numbers. Nova Vistas and Ultratech, Ambuja, all these companies have been posting good set of numbers, and given the kind of a infra focus we have right now, and given the summer, which is the seasonal month for cement companies, he can hold on to the ITD cementation, and he can add some more at dips.
Okay, fair point. I hope this has answered your question. Let's take the next question. This one is from Mubarak Hussain. He says, Namaste Sakshi ji, I have retired yesterday and I want to know about some of the stocks in my portfolio. I have 60,000 shares of NMDC at 66, Canara Bank 20,000 shares at 93 for pure dividend play. What is your opinion on both these stocks? First of all, Mr. Hussain, many congratulations on your retirement. You can finally, live life to your own choices now. So, looking at that you are adequately invested, we'll definitely hope that our guests are able to guide you better for your, new, innings that you're beginning on the retirement front. Mr. Hussain has two stocks, sir. NMDC he has at 66 and Canara Bank at 93. What should he be doing now?
He can hold on to both the stocks, Sakshi. NMDC is concerned, it's by and large cyclical stock, okay, but still uh, the margin of safety is high in NMDC. He can hold on to both the stocks for a medium to longer term perspective.
Okay, got that. I hope this has answered your question, Mr. Hussain. Let's take the next question now. This one is from Shyam Koya. He is from Andhra Pradesh and he wants to know a fundamental view, sir, on Inco Elecon. He has a position here about 240 shares odd at the rate of 2900. Inco Elecon, let's look at the current price also of the stock at this current level. It's trading at 1738. His purchase level was much higher than the current level, sir, 2900. So he feels probably he's stuck here. In the last 6 months, the stock has declined by about 34%. We have seen in the last 1 year or so that the decline started in fact in November. From the peak of 3,233, the stock has actually been seeing a lot of downtrend. Things started to improve just in April, I believe, from about low of 1400 odd levels. We did see some pickup coming in, and that's why Mr. Shamkoya wants to know what is the view now on Inco Elecon, sir.
There was a heightened activity and the stock was in a momentum zone, actually. 6 months back, stock was hitting everyday upper circuit. Some kind of speculative activity was there. The investor got it at a wrong foot at a wrong time. But by and large, given the kind of current valuations are concerned, given the kind of business model the company have, he can hold on to the stock. But the current quarter results they came at a very flattish kind of note. Just hold on to the company and you can try to exit at rallies whenever there is some kind of a positive momentum in these small cap companies are concerned. It's a relatively small cap company at 1,000 crores market cap at present. So he can hold on. There can be some kind of improvement in the coming quarters.
Okay, got that. I hope this has answered your question too. Let's take the next one. This one is from our WhatsApp that we are getting some questions. Ajay from Delhi writes in. Hi Ajay, good afternoon to you. He says, I have a query on Tips Music. I already have this stock in my portfolio, about 100 shares at a cost price of 201. Currently, let's look at the share price also of Tips Films, Tips Music. Is at 630 odd levels currently, and when we look at the last 6 months trajectory, it's rather been bleak. 30% odd kind of a loss is what you've seen, and even on a year to date basis, it's been rather very volatile and sideways, to say the least at this point. I think it slipped from 900 odd levels in November of 2024 all the way down to now 630. So, but the question is that his purchase price is like much lower of 201 levels. So he's still sitting on a gain of about 200%. So first up, many congratulations to you, Ajay, that you actually held on to this stock, which is currently giving you about 200% kind of return. He says that he's a long-term investor. I want to know what exactly should he be doing with this position? Should he hold on, especially because the stock has declined about 30% in the last 6 months? We'll definitely help you out, Ajay, on this one. If I remember right, Mr. Bathini, this was also one of the stocks that was recommended last year by Mr. Mark Mobius, also one of the choicest stocks that he had in the Indian stock markets as well. Your suggestion on this one?
Actually, on a year-to-year perspective, the stock has been posting good set of numbers if we live in the quarter-to-quarter comparison. One thing is this stock also one of the key multiplier in the last 3-4 years. The stock has moved from a range of 150 rupees to the range of 900 rupees in the past 3 years. So look this stock as a long-term perspective. On a year-on-year, given the kind of current business model they have been doing good in terms of a year-on-year basis are concerned. So you can hold on. The best thing is whenever these kind of spikes that do come into the picture right now in these kind of business models, um, making the FOC free of cost is extremely crucial in these kind of market conditions. So any rally in this stock, I would advise the investor to take back his capital remaining. It's just a bonus for him. Just stay invested and observe the business model for the longer term prospects are concerned. So any uptick in the stock from this level, I would advise the investor to take back his capital, remaining stay invested.
Okay, hopefully this has answered your question. Let's take the next one. This one is from Mohit from Ludhiana. Mohit says, hi, Sakshi, good afternoon. Good afternoon to you, Mohit. Hope you're well. Wants to know on Bandhan Bank now. He has got 500 shares at 187. His time horizon is 2 years. He wants you to guide him. But we've actually seen Bandhan Bank's earnings, and post the earnings, there has been some disappointment as well. On the earnings front, let's look at how the stock is down by about 2.5%. This was largely expected on the back of earnings because they haven't been very enthusiastic because NII has fallen. Asset quality, even though continues to be stable, but there is an earnings miss on the rising MFI slippages that continues to be something that everybody is looking at. This is despite the profit has surged nearly sixfold, but that's on falling provisions. But there are, some worries that, the brokerage houses are highlighting on this one as well. And, on the back of that, we have also seen some of the reduction in the target prices also from brokerage houses on this front as well. NIMs are also coming down, and that's something that is also continuously putting up pressure on the stock. Bandhan Bank for you, what is your suggestion, Kranti sir, on this one? 187 is the purchase price.
Sakshi, since he's an existing investor, can hold on to Bandhan Bank. Of course, there are lingering worries across the results and also the way the bank has performed, and also it is one of the underperformed in the past 3 years. And we all know how the microfinance business is uh, getting impacted in terms of the challenges of NPAs and also recovery is concerned. And every state have been implementing their kind of a local laws, statewide laws in terms of the microfinance books are concerned. So that's where impacting the Bandhan Bank. Uh, Even also the exit of the, the existing long-term founder as a chairman, that also created some kind of pressure on the stock. So until unless the investor is a high risk appetite, he can hold on. Otherwise, he can exit at rallies. But one thing is, it is the bank which is trading exactly at their book value. So that gives some kind of a comfort for the investors. But given the kind of business is concerned, we are not seeing the traction and earnings improvement in terms of the Bandhan Bank is concerned. So he can exit the stock at rallies.
Okay, got that. I hope this has answered your question. Let's take another question. This one is from our YouTube viewer, Mr. Dasaradhi. He says, I'm holding 200 shares of ONGC at the rate of 243. He says, can I hold to continue to hold on this one, or should I exit? Due to the oil prices, the stock has been seeing some negative movements. So what exactly should my strategy be? So bought at 243, currently the price is at 240. Any suggestion on ONGC?
So actually, you can hold on to ONGC despite of correction in the crude oil prices. Given the kind of valuations looks very attractive, and it's a cash-rich company and a good dividend yield company. So in that perspective, you can hold on to ONGC. It cannot be pursued as a medium to short-term investment proposition. For a longer-term proposition, definitely you can hold on to ONGC. And in fact, if at all any dip in this stock, you can start accumulating further.
Okay. Taking the next question now. This is from Satyan. He's and he says that he has been watching our show regularly. Thank you, Satyan, for writing in. His question is on the auto ancillary names, Sona Comstar and Uno Minda, two of the stocks from this basket. He wants to know any levels to continue to add this stock, or where exactly should he exit as well. He's not mentioned any of his existing position as at what level did he buy Sona Comstar as well as Uno Minda, but currently wants to know what is the trajectory, whether it's time to add more or to book profits.
With respect to Sona Comstar is concerned, actually, the stock was in a downtrend in the medium to short term. Both the stocks are trending below the 50 to 100-day moving averages. Okay, that's where the extra pressure is getting created on the stock. The current quarter results are decent at this point of time. So he can hold on to both the stocks on a medium to longer term perspective.
Okay, got that. Hopefully this has also helped you out understand the way you should be really looking at the stocks over there. But Mr. Bathini, now let me ask you some questions that are coming in from our viewers, which are generic questions. So one of the question is that in case if India-Pakistan war escalates, what should be investors' strategy? Should one pull out all the money and put it in gold and silver? That's one of the questions that are coming in. I'm sure a lot of viewers must be already having this doubt in their minds. We have also come out with several, indications for our viewers that in the past, historically, what we have seen, anytime the India-Pakistan conflicts have taken place, there has been a knee-jerk reaction, and that too mild, but things have recovered pretty sharply. And there are some brokerage house reports, they also indicate that in case the war escalates, there could be a downside of 5 to 10%, but things could actually recover from there on. What is your own suggestion? Retail investors are now worried because over the last 5-6 months, they've already gone through a lot of consolidation. Many of the stock prices have actually corrected in their portfolios 20, 30, 40%. So they're literally standing at brink of that, if it falls further, they'll be, incurring heavy losses. What exactly would your view be and suggestion be, sir?
Yes, actually, definitely there will be a knee-jerk reaction when the first gunshot that goes out. But we need to closely observe, actually, how these escalations are going to escalate further, the tensions going to escalate further. That is extremely crucial. Um, with respect to the fresh cash is concerned, just try to be on sidelines, but the existing portfolio is concerned, stay invested, nothing to worry. One of the key character and feature of Indian market is it is quite a resilient market. That's what we witnessed in the past 15, 20 years. That's where the beauty of Indian market. There might be worries, and Indian market have a typical behavior of climbing these wall of worries in a nice way. So just wait on to the news and how the things are going to escalate further. We have witnessed Kargil, and we have witnessed many kind of surgical wars with respect to the domestic geopolitical escalations are concerned. And we also witnessed a war like war in Ukraine and Russia, and also the Israel wars, what we witnessed. Market have given some kind of knee-jerk reaction for these global uncertainties are concerned. But with respect to India and Pakistan, it's going to be a peculiar thing because it is where India is directly involved in this kind of geopolitical issues. So uh, uh, just observe the things. Nothing to worry. Not much impact. In terms of the textbook theory is concerned, actually, whenever there is a deep war escalates, okay, the industrial activity in a country will go up. In turn, it creates corporate profits also. Uh, that's the kind of a textbook theory which we witnessed in the World War One and Two. Those are the extreme cases in nature. But by and large, coming to the current saga of events, okay, stay on cash. Any dip on Indian markets is definitely is warranted by. Of course, there will be a kind of a knee-jerk reactions to escalate. I'm also crossing my fingers.
Okay, got that. But if I have to ask you, I think a lot of people also have a doubt right now. Since gold prices have already inched up 30-40% over the last 1 year, will it still be, prudent to look at gold and silver at these levels? Do you think they can repeat the kind of returns they have given in the past? Of course, over the last 4-5 years, gold and silver has, given massive returns, much better than even equities. So, will that trend continue? I think that's the question that everybody wants to know. What should be the ideal approach then between equities and gold as an asset class, sir?
Sakshi, in terms of the uh, asset diversification is concerned, some kind of a gold and silver allocation is needed given the kind of uncertainty, trade tariffs, and geopolitical issues that are going up, and also depreciation of the dollar. The one of the good hedges for the investors is investing in the precious metals like the gold and silver. And silver tend to outperform gold. Most people tend to ignore in the medium to long term. But uh, if I want to fill my entire portfolio, if I want to give a highest weightage portfolio allocation for silver and gold, definitely not. Okay, it can be a 5 to 10% of my portfolio, which I can give weightage of my entire investment portfolio. Of course, it's needed, but one thing one need to understand is these for silver, gold or silver, the dividend yield is absolutely zero. It's a commodity which is driven by demand and supply. Whenever this kind of escalation tend to go up, definitely everyone in the world they run for the safe haven like gold and silver. That's where they get the edge. But as long as the money printing is on and also geopolitical issues uh, goes up, it tend to give an impression they are outperforming. Of course, after touching all-time high of $3,500 per ounce in U.S. market currently, there was some kind of a softening of the prices also. Currently, gold is trading at a 3 months low. So these kind of softening also do expect in gold, but I don't think so. There would be greater corrections because still the policy uncertainty is still there. Uh, but uh, but gold outperforming equity market, it is just short term in nature. Definitely, equities outperforms any other asset class on a longer term basis.
Hmm. Okay, got that. I hope that's also helped you out in understanding the key strategy there. Now, help us understand, Mr. Batini, your view on the overall earnings that have come in so far, and where do you feel investors still have a chance to really look at an earnings play? Where is the trend really improving now, sir?
Yeah, banking and financial services definitely shown a upward tick, Sashi. And also stocks are concerned, they're also showing a strong rebound. We look at the GST collection. We are at for the month of uh, March, the collection which has taken in the month of March, 2.37 lakhs crores. If the same number can be repeated in the month of April, okay, we are at a strong note in terms of the domestic consumption. So domestic consumption also going to play an important theme. And look at the healthcare, one of the strong sector. And last 1 month and all, healthcare has been outperforming. So any dip in healthcare also one can add uh, for the uh, for the investment horizon. How the hospitality stocks are going to, the hotel stocks are going to perform, that's crucial because of the rising geopolitical concerns and all the traveling to India and all. We need to see, okay, but it is completely domestic at this point of time. By and large, the domestic centric stocks looks very attractive to me, Sakshi. The first and foremost is banking and financial services, and the second is the defense also still the defense budgets are going to go up in the next coming quarters, coming budgets also. So defense is one of the strong play which have a strong earning visibility. Sometimes people tend to say some kind of a valuation discomfort. But whenever there is a valuation discomfort and the stocks use any correction, that's a warranted buy for the longer term investors. Railways, they had a strong rally and they're in a consolidation play. But given the kind of a long term order book and earning visibility, any correction in railway stocks also could be a good buy for the investors for a medium to longer term perspective.
Okay, got that. BFSI, banks, financials, defense, railways, select pockets. Those are the pockets that Mr. Bathini is looking at for opportunities emerging at the current levels. Well, we'll thank you, Mr. Bathini, on that front for being with us on the show, helping all our viewers out with all their queries as well. And viewers, we will now wrap up our daily calls edition. That's the 7. Thank you so much, Mr. Bathini. Viewers, we'll also now wrap up the trade on daily calls. 78 points of a cut on the Nifty. So we are now testing 24,250 odd levels. So keep an eye out on that. We're sharply lower from the day's high point and looks like the volatility is now only increasing. On the markets, only the oil and gas sector remains in the green. Rest of the pockets have all slipped. Consumer durables 1.6% down, metals down 1.3%. From sharp moves higher into the green, the correction has been steep and fast at this point in time. India VIX from about a downtick of 5%, it's rallied about 3%. So there is a wide range there. Adani Ports continues to be the top mover on the Nifty. Hindustan Bank, Maruti, Reliance Industries, Eternal remain the top movers, but just a handful of those stocks which are in the green. But JSW Steel, a 7% downtick that's coming in, especially after the news flow that, courts have rejected, Bhushan Steel kind of move that we have seen on that front, and that's the reason why JSW Steel has seen that sharp move on the lower level. Supreme Court now holds Bhushan Power and Steel resolution plan as illegal, and that's what is creating some pressure there. Eicher Motors, Bajaj Auto, Nestle, Cipla, HDFC Life are some of the other laggards at this point. On the PSU stocks, oil and gas, especially the OMCs, they continue to hold up. Some railway stocks, RVNL, IRFC are also up and about in trade. Adani Ports continues to hold up. PNB Housing, after that big block deal, is holding up in F&O. And we're also seeing some move on IOC and Adani Ports. Those are the F&O stocks that are holding up. We'll leave you at that, but do stay tuned. 1 p.m. we have a special discussion on bonds. In case you are new to bonds and you want to understand whether bond market is something that you should be looking to explore investing in, then catch up the special conversation that will take place at 1 p.m. to know everything you need to know about bonds.
Some journeys in life aren't written, they're fought for. Two incredible souls sit with us today, whose journeys began far from the gates of power, fame and legacy. What